Hello, everyone. This is your crypto market update covering the past 2 to 3 days as of February 11th, 2026. Rather than repeating short-term price fluctuations, let's focus on what structurally changed and what remained intact. Market structure. Over the last several sessions, the crypto market has experienced renewed downside pressure. Bitcoin briefly moved below the $68,000 level before stabilizing in the mid-67,000 range. At first glance, price action appears weak. However, structurally, the market has not entered a breakdown phase. There has been no disorderly selling, no cascade of liquidations, no spike in panic-driven volume. Instead, what we are observing is a controlled pullback within a broader consolidation range. Volatility has increased modestly, but trading volumes remain moderate to slightly reduced. This typically reflects cautious positioning rather than forced de-risking. The distinction between controlled retracement and structural failure is critical. At this stage, evidence supports consolidation, not deterioration. Bitcoin positioning. Bitcoin declined approximately 3 to 4% across the past few days. The $69,000 to $70,000 area continues to function as near-term resistance, while the mid-67,000 region has acted as short-term support. Technically, BTC remains range-bound. More importantly, liquidation data does not show stress in the system. Leverage appears relatively contained compared to prior volatility cycles. When markets become fragile, we typically observe rising open interest combined with aggressive funding imbalances and forced unwinds. That is not currently visible. This suggests that positioning is defensive, but not stretched. One of the more important signals over the past few sessions has been ETF flow stability. Spot Bitcoin ETFs recorded cumulative inflows of roughly $160 to $170 million, partially offsetting prior outflows. This is meaningful. If institutions were aggressively de-risking, we would expect accelerated price declines, expanding volume, and sustained outflow pressure. Instead, we are seeing measured inflows during price weakness. That behavior aligns more closely with selective accumulation than distribution. Institutional capital appears cautious, but not retreating. Ethereum and altcoin landscape. Ethereum mirrored Bitcoin's movement, trading lower but maintaining structural support levels. ETH ETF flows remain moderate, though less aggressive than Bitcoin's, indicating steady but controlled positioning. XRP demonstrated relative resilience, partly supported by ETF dynamics and recent allocation adjustments. Across the broader altcoin market, performance has been mixed. Some mid-cap assets attempted short-term recoveries. Others continued consolidating in line with Bitcoin. Importantly, correlation with BTC remains elevated. There is no meaningful capital rotation into higher-risk altcoins at this stage. That indicates defensive capital allocation rather than speculative expansion. Macro context and liquidity sensitivity. The dominant driver remains macroeconomic anticipation. Markets are positioning ahead of upcoming U.S. inflation and labor data, which may influence Federal Reserve expectations and liquidity conditions. Until macro clarity emerges, range-bound and reactive conditions are likely to persist. Liquidity expectations, not narratives, are currently guiding price behavior. What actually changed and what didn't? Over the past several days, no structural breakdown occurred. No systemic leverage event unfolded. No institutional panic emerged. No regulatory shock disrupted the market. What we have instead is a transitional environment. It is not euphoric. It is not capitulative. It is cautious. Positioning remains defensive but stable. Closing perspective. Markets do not move in straight lines. At this stage, crypto appears to be consolidating while awaiting macro confirmation. Support levels remain intact. Institutional participation remains visible. Leverage remains contained. Until a decisive macro catalyst appears, the market is likely to remain range-bound and liquidity-driven. That's your structured crypto market update. See you in the next one.